Loan has become a four-letter word in our society. It's important not to be afraid of it, but rather understand it. There are different types of loans, but let's talk strictly about student loans. Know the source of your loan. Where are you getting it from? A credit union, a private bank, or the United States Department of Education? By filling out your FAFSA, you could be eligible for student loans through the U.S. Department of Education. A lot of people choose this option because these loans have lower interest rates, good grace periods, and some are even subsidized.
A subsidized loan is a need-based loan issued by the Department of Education, and they pay the interest on the loan while the student's in school and during periods of deferment and during their grace period. The interest rate is reset annually on the subsidized and the unsubsidized student loans, but a subsidized loan is better for you, the student, because the interest is going to be paid for you while you're in school.
If you get a Stafford subsidized loan, the government will pay your interest while you are in school and you maintain at least a half-time student status. Half-time depends on the college you are attending, so you need to ask. At SRC, this means being enrolled in at least 6 credit hours.
An unsubsidized loan is very similar to the subsidized loan, except you're responsible for the interest from the date that that loan is fully disbursed until that loan is completely repaid. So an unsubsidized loan is going to cost you more over the long run because you're paying interest on that loan from the date it's issued.
An easy way to remember is that you might be unhappy about paying the interest with an unsubsidized loan. The interest rate is still significantly lower than most private lenders. Now, if you can't afford to pay the interest of your unsubsidized loan while in college, don't worry. The IRS isn't going to come steal your books or anything. It will just be more expensive in the long run.
We always recommend that students only borrow what they have to be able to make it through school. You don't need money, extra money from a student loan to pay for things that you don't need. So live well within your means and borrow only what you need to, because each year the amount you borrow is added on to what you borrowed the year before. And we recommend students monitor and keep track of how much they've borrowed. That way when they enter repayment, they're not surprised about that big student loan bill that they have coming that they have to pay every month. The more you borrow now, the more you have to repay later, but student loans are a good way to help you pay for your education. It's a good way to finance your education if you can't afford to pay for it out of pocket. We also recommend students consider working part-time while in school.
So remember, the source of the loan, whether it's subsidized or unsubsidized, how much is that interest, and the grace period. If for some reason you cannot make the payment, see what the repayment options are. Sometimes you can get it based on income, sometimes you can't. So when you start receiving that mail that your loan grace period is ending and you can't financially pay for it, find out your options. Deferment or forbearance does not hurt your credit. Default does. It will be your default if you just throw away the mail and pretend these loans don't exist. Be aware and be smart. For information about scholarships, grants, and loans, be sure to stop by the Spoon River College Financial Aid Office closest to you. Here are some websites that will help you as well.